Dan, you wrote in the Wall Street Journal that the numbers tell a complicated story about whether big tech's invincible. But I think maybe it's just a complicated story about whether big valuations are invincible. If you look at the fundamentals, they did pretty well.
Yeah, I agree, John. They did very well. And I think you hit the nail on the head when you're talking about this is a market where these companies are extremely strong and they're continuing to be strong, even in the pandemic, which is hurting so many other businesses. But expectations are really through the roof on a lot of these. You know, you mentioned Apple a few minutes ago. It's still at a record high valuation, ahead of an iPhone cycle that people are calling a super cycle, but they weren't even really confident enough to put a specific revenue projection on the December quarter even. So I think there's, you can parse in, I'm sure it's going to be a good cycle for them, but where expectations got so high, you're starting to see, I think, a bit of a come down to realism here.
Yeah, Ross, I wonder about Apple not giving guidance here because it's weird. I mean, they can see what demand is in calendar Q4. They almost always can't make enough phones to meet demand. Surely they must have some idea how many they can make. And plus, e-commerce is hot, and Apple's got a great direct channel. What do you do with Apple here, and how much are you paying attention to this lack of guidance?
I think the lack of guidance is a reasonable thing for the most conservative guiding CEO out there, so he does, with COVID kind of flaring up again and obviously not being really sure what iPhone in China is going to do. Is it at the bottom now, or is it, even going to get worse for iPhone in China? I think it was prudent of Tim, but this is just about valuations to me. Apple has been trading at 18 and 16 times earnings forever. Now it's at 32 times earnings. And, you look at Apple, it's actually higher than that. And you look at the fact they've bought back so much stock to boost earnings while revenue has only grown a little over the years. But actually now they're in, I think, a much better position they were in than like a year or two ago because of the pandemic. So, yeah. and their focus on services. So for us, it's just a valuation thing. We have no change in our feelings for Apple. I'm super bullish for Apple over the next year with the 5G cycle and services and wearables doing so well.
Yeah.
I think the main issue is if you're going to pay, you can't buy back stock at 35 times earnings, True.
All right. Well, Dan, what do you do going back away from Apple for a moment here to the internet and specifically social media stocks? What do you do? I mean, we're going to talk a bit about this later, but Steve Leisman's going to bring us some data talking about how people don't trust social media, but boy, are they using it, right? Because the revenues are through the roof. We're talking for a while this year about the advertiser boycott. That was nothing. The advertisers aren't boycotting. If anything, the users are taking a step back. But is that really a fundamental issue?
It could be. We've seen some blips of this before where usage seems to either go down or slow, especially right after Cambridge Analytica, we saw a blip in that. It's hard. Honestly, it's hard to know because I think what we're seeing in social media is an interesting phenomenon where users are spreading out a bit. We saw fantastic numbers with Snapchat, with Pinterest, where, stories where I think the political stuff takes more of a backseat because politics aren't such a big part of those platforms. But Facebook, again, dealing with all these challenges and scrutiny from government, still brought in huge ad numbers. I think because overall with online advertising, with e-commerce and everything, there's just a lot of upside drivers there of businesses trying to reach customers where they're at. And that's great for, I think, almost anybody in online advertising right at the moment.
Shepard Smith here. Thanks for watching CNBC on YouTube.